Welcome back. Rajat Sharma and Sameet Chavan joining us now this afternoon as well. Rajat, good afternoon. Markets have been so incredibly quiet lately, and given the fact that there isn't any near-term trigger that we're really watching out for, what do you really see happening over the next couple of months?
Yeah, good afternoon, Abha. So, I think it's very difficult to say what markets will do in the next couple of months. At some point, they're due for some little amount of correction. It may or may not happen this month, next month. But the interesting thing is that over the last 2 months, we've seen so many subscribers joining us, so many new accounts opening, but at the same time, we've seen neither trading nor investing is anywhere close to the volume that which it was towards the first half of this year. So I think everyone's fearful of that one fall which is going to happen at some point, and everyone's waiting for that fall to happen before they, start investing or start trading these markets again. My general sense is that even if such a fall were to happen anytime in the next 2 months or 3 months, it may not be as sharp as some of the previous falls have been, purely because the cash levels at most fund houses and even with retail investors are probably at their highest level right now. So if there is some correction, a lot of cash will come in and quickly get the correction will quickly get absorbed. So what do you do at times like these? I think the best strategy would be to keep allocating more money to stocks where you see value emerging. Despite the fact that markets are overvalued, I do see some sectors and some stocks where there's a lot of value emerging now. So that's what we're recommending.
Right. Sameet, let's get a check from you on the index and the kind of range that you're looking at.
Good afternoon. We have been witnessing this consolidation phase since last 3-4 weeks. The lower range is somewhere around 85.50, 85.10, and higher end we are seeing somewhere around 8700, 8720. Nifty is clearly stuck in this range, and on Friday and today also in the morning session we saw Nifty testing those lows around 85.40, 85.50 mark, and from there we saw good decent recovery in last couple of hours. Nifty is heading towards its higher end. That's what we are expecting. 86.80, 87.20. These are the next levels that probably we may see retesting in next couple of days. We believe that this is clearly a consolidation phase after a sharp rally from 8,000, 8,100 levels, and we expect this consolidations to happen at least for next couple of weeks before dictating further direction. On the higher side, 87.20 we are seeing as a strong resistance. In case of an extended move, we expect 87.50, 8800, and thus in this bullish scenario we would advise traders to stay light on positions once Nifty reaches the strong resistance of 8800. And on the lower side, once Nifty breaches 8500, we don't see major downside as such. Another 100-120 points fall is quite possible. So at least for next couple of months, our outlook would be Nifty is likely to stay in a consolidation mode, wherein the range would be slightly broader. 87.50 to 8800 on the higher side would be a strong resistance, and lower side 83.80 to 84.50 would be a very strong base.
Okay, what's your take on Reliance, Sameet? Let's take a look at that this afternoon.
Reliance has been a sideways since last 2 months. We have been witnessing this range of 1030, 1040. Today we have seen a breakout from this range with decent rise in volumes. We expect this move to extend a bit. 1080, 1085. These are the next level which we are expecting. In fact, in the morning we had recommended this stock somewhere around 1042, 1044. Stop loss would be around 1018. And we expect the stock to head towards 1080, 1085, which is the higher end of the range.
All right, a couple of other stocks that are looking good: ICICI Bank, Hero. Any of these on your radar as well?
Yes, from the banking space, we have been maintaining our positive bias on 2 stocks, Axis Bank and ICICI Bank. However, of late, Axis Bank has given a very good rally and is now hitting its new 52 weeks high. As far as ICICI Bank is concerned, we clearly witnessed consolidation in the stock. However, if we look at the daily chart structure, the stock is trading around its strong support zone of upward sloping trend line, which is placed around 250. Earlier, this support was somewhere around 238, and now looking at today's price movement, the base has shifted higher. 248, 250 we are seeing as a very strong support now, and in the near term, probably next couple of weeks time, we expect this stock to give a very good move. 270, 272, these are the next possible level which we are expecting. So any minor dip would be a buying opportunity. Keep a stop loss below the recent low, which is around 240, and our near term target would be somewhere around 270, 272.
Okay. Rajat, financials of course continue to be, in focus. Today we've got ICICI, we've even got some of the other mid-cap names moving, and they have been the one bright spot in an otherwise quiet market. So within the financial space, once again, what's the strategy you're looking at? Any specific stocks as well that are on your radar?
So Abha, in the financial services, we've already made our bets. We've already put a lot of money in housing finance companies. So NBFCs is one space where I've been very positive for about the last 5 to 6 months. But we've seen a lot of these stocks run up a lot. So we've recommended Canfin Home, Groove Finance. A lot of these stocks have run up a lot. But despite the valuations at which they are right now, I'm not worried. So I wouldn't recommend anybody to sell these stocks despite extremely rich valuations, I agree. But the reason for that is I think going forward, RBI is likely to continue cutting rates over the next 2-3 years. That, coupled with the fact that housing prices across the country are coming down, they're probably in the best zone to sort of do well going forward. This week what we've done is we bought NTPC and we bought L&T. And we've sold Steel Authority of India, which has run up a little, and we've sold one stock that I've had in my portfolio for a while, which is D-Link. We've sold that in a loss. So that's what we've done this month, really. Nothing on the NBFCs or financial side, but that's because we've already made a lot of investments. So even right now, when I look at my portfolio, around 60 to 65% of my portfolio is in financial services, banking, and NBFCs.
Okay, any of the other NBFCs on your list as well, Sameet?
See, from this space, we like Indiabulls Housing and LIC. They have been making their fresh highs. If you look at the Indiabulls Housing Finance chart, the stock has given a V-shaped recovery from 620, 640 and is now trading around its new all-time high. We expect this moment to continue 856 to 862. These are the next possible levels that we are expecting. So we would maintain our positive bias on Indiabulls Housing. At least another 5 to 6% move is quite possible. So any minor dip would be a very good buying opportunity, and we are seeing a strong base now building around 790, 800 kind of mark.
Okay, so let's take a look at some of the OMCs as well today. Got IOC declining a little bit on that GRM drop. Still continues to be a pocket of the market that that has been looking interesting of late. We've also got ITC a little lower today on the back of a bulk deal as well. So a couple of these heavyweights. Tata Motors, however, continues to look positive. That's a pocket of the market that we continue to look at. Rajat, the auto, Tata Motors, strong post earnings. Heroes looking good today. We're heading into festive season. Auto ancillaries also seem to be very active.
Yeah, Abha, sometime back I was listening to whoever the gentleman from Bridgestone was, and he made some very interesting points. I think more than the automobile stocks, Tata Motors anyways is an exceptional stock because Every time people doubt whether Tata Motors can, continue to perform well, especially in overseas markets, JLR comes up with some of the strongest numbers that beats its own record. So, I think this is one of those stocks you should buy in your portfolio, and irrespective of what the markets do nothing with this. But on auto ancillary, I think if you see Seat and Apollo Tyres, they're all trading at, a P multiple of 8.5. And, once the GST does come in, auto ancillaries are, the one segment of the market which will benefit the most because of that. Now with, auto sales picking up, and the other thing is auto ancillaries like tire companies do not really get affected that much whether auto sales pick up or not, because they have a huge secondary market in a country like India too. So right now where we are, tire stocks should do well going forward. I would think so. The only worry is right now markets itself are really expensive, and when markets correct, if and when they do, most sectors would come down by 5 to 7%. So right now you would rather allocate money to stocks which are available cheap and which will possibly be protected by an overall correction in the market. So that's why I think Larsen & Toubro, NTPC, ITC you just spoke about, these are the stocks which are available at very good prices right now. The other segment of the market I was reading about is IT, and I think IT companies right now are looking attractive. A little more fall from here and those would be really, really attractive right now. And I do think that there could be some correction there until the US elections are out of the way. So watch out for IT companies and maybe allocate some cash there going forward.
All right. Now, let's also get your view from Jyotirvardhan Jaipuria, saying that there are risks to investing in broader markets, but looking beyond crowded trades can also be beneficial. Listen into some of his views on the kind of strategy with regards to broader markets that he's looking at.
If we look at mid caps and small caps, and it's like a general thing, and it's true not just for India, it's true across the globe, that one of the factors everybody has to factor in is like where are the liquidity and can you get stuck in this mid cap for a long time if things go wrong. So that's always been one of the scenarios. Typically most people who buy the mid caps are the individuals or very small institutions who are buying it. They're hoping to nurture it till they become big, and then at some point they are hoping that they can sell up their stake to institutional holders who will get in at that stage. We see that in even this sort of market. We've seen mid caps have a very, very sharp rally. Mid caps to some extent are probably looking much more expensive than what the large caps are looking. If you look at broad indices, then the mid cap index is trading at like a 30-35% premium to the large cap indices. So mid caps are looking expensive, and to that extent probably now there will be this problem for people to get out of them, because even for the institutional player, valuation may become a bottleneck. That okay, I like this company, it's a company which can grow very fast, but not probably at these valuations. So it will be either the earnings will have to catch up so that valuations get justified, or then the share prices will have to come down. And it could be a question of both of these things happening, where earnings will catch up over the next few quarters, but before that we could see some correction coming through in the share prices also. But yeah, the mid caps are probably like the more exciting space at a time where if the recovery happens, then mid caps in terms of earnings probably does much better than the large cap too.
So, Jyoti, from your perspective, the challenge here for investors sometime is, do I get into larger stocks? But then in larger stocks, the challenge is that I'm getting into pretty heavily crowded trades. Or do I get into, down the line smaller stocks, but in a market like this, like you said, maybe they look expensive. How are you balancing this while still keeping a return above the index in mind?
Yeah, so like the way we look at it, we run a portfolio which has what we call the 3 U's. So first is we are looking for stocks which are undervalued, second is we are looking for stocks which are underowned, and third is stocks which are unloved. So it keeps getting more challenging as you get into a market which has moved up a lot, but you still find stocks. In some sense we are agnostic between large cap and mid caps. but we tend to find more of them in the mid caps than really in the large cap space, because a lot of the large caps, like you said, are crowded. In large caps, you have to essentially look at things which are totally out of favor, or nobody wants to buy them, and what you have to think is, okay, 2 years later, if we get the economy recovering, then will this sector still be out of favor, or do we start to see some interest coming back into the sector? One easy example which we've seen over the last 6 months is the steel sector. So totally out of favor, a lot of the stocks in the price to book were totally beaten down, very, very cheap. Nobody owned them, nobody wanted to buy them. And then we got a bit of improvement coming through in the global scenario. We got the MIP coming in from the government, and a lot of the steel stocks have done very well in the last 6 months. So it's like, if you want to go into some of these contrarian trades, then you need to buy some of these sectors which are out of favor, and always which probably are cheap. But the waiting period in them could be little larger than what you do in a normal scenario. So don't buy them thinking you'll make money in the next 1 month or next 2-3 months.
Okay. We've got a few other stocks, Sameet, that I want to run you through in terms of movement this afternoon. We've got RCap, R Infra that are moving, for example. A couple of these, and they have been, in fact, been on the move for a while, Reliance Infra in particular. Want to get a tech check from you on some of these counters?
If we look at the Reliance Capital price movement in last 3 weeks, the stock has given a spectacular rally. It's now trading around its new 52-week high. And looking at the ongoing momentum, we expect this momentum to extend a bit. This stock is clearly heading towards 550, 560, which is the next hurdle on the medium-term charts. If we look at the Reliance Infra, this stock has been a slightly underperforming stock as compared to Reliance Capital. We saw consolidation happening in the stock in the range of 605, 610 on the higher side, and low side 560, 565 was acting as a very strong support. Today we are seeing a good traction in most of the ADAG group stocks. Reliance Infra 2 is giving a very good move, but 602 to 607 would be a important level to watch out for. Once this stock surpasses this level on a closing basis, we could see this stock heading towards 635, 640, which would be a next hurdle to watch out for. We would maintain our positive bias. Momentum traders rather should wait for a breakout, since it is trading around its strong resistance zone. Once it surpasses this mentioned levels, we could see a very good surge towards 630, 635, as I said.
Okay. What about an LNT as well, Sameet? Let's just take a look at that and how's it looking on the charts?
See, this has been a laggard since last 3 weeks. We saw consolidation happening after it's hitting a new 52-week high of 1580, 1600. This stock has been moving around its strong support zone, which is placed around 1450, 1460. Today we are seeing a good traction, and this stock is now on the verge of giving a close around its day's high. So that's a positive sign as far as momentum traders are concerned. This stock can give a decent bounce towards 1500, 1520 in next probably 4 to 5 trading sessions, and we are seeing a very strong support at 1440, 1430. So traders should trade with a positive bias as long as this stock maintains its position beyond 1440 on a closing basis.
All right. Rajat, what did you make of the Fed commentary yesterday as well? I mean, given the fact that markets didn't really shake much with whether it was overseas or here, do you feel that even if they do hike that rate sometime this year, markets have pretty much priced it in?
In fact, I think our Fed raising the rate would actually be good given the amount of liquidity we see in the system right now. I think the biggest problem right now is that with Nifty valuations at 23.5, 23.6 on a trailing basis, there is constant investment from the FIIs into the markets, and valuations will not cool off until that stops. So as I said, a lot of retail investors are holding back from investing because the consensus is pretty much everybody is aware that markets are really expensive right now. So that I think would be healthy going forward. One thing I will say, I was just listening to Jyoti about either earnings have to catch up or markets have to correct, and we were looking at something very similar to this last week at our office. And for the first quarter, the earnings reported so far, the improvement in corporate earnings over the first quarter of last year is around 24%. And on a sequential basis, that's about 16%. So while you may talk of valuations at 23.5, 23.6 on the Nifty, if the earnings improve at this rate for the remainder of the 3 quarters, and I'm talking about exactly this rate, then at the end of the year, at markets where they are right now, we will be at a valuation of 19.5, which is a 10-year average. So, if you look at it that way, and I'm the last person to, assume things and say that will happen, so markets are not so expensive. Markets are expensive. But if earnings were to improve better than how they did in first quarter, then I think we are actually undervalued right now. Now, the reason is that when you look at the Nifty's PE on a trailing basis, the last 4 quarters, barring this one, the 3 quarters before that have been really weak in terms of earnings. So that's why, the PE multiple is looking so expensive. If earnings keep improving the way they are or better it, we're actually undervalued right now. But on the Fed's rate hike, look, I think it's anybody's guess what the Fed will do, but there is no denying that there's enough liquidity in the system. Fund houses across the world are reporting highest cash levels that they've had, and that's why I said even if a fall happens, it may not be very deep because a lot of money will come in to, stabilize that. So, yeah, that is that.
Sameet, anything that's standing out to you from broader markets in this session?
We are a bit on NMDC. Last week we saw the stock confirming its high top high bottom formation on weekly chart. Since last 3-4 days the stock has given a gradual decline, but 105, 104 we are seeing as a very strong support, and today we are seeing a good traction along with a very good volume activity. We expect this momentum to extend our immediate target.
I just want to get a take from you on festive season as well, and really the kind of boost to consumption you're seeing post the monsoon, and we're expecting the pay commission to start kicking in as well. So the next quarter is going to be pretty critical in that sense.
Yeah, for sure. And you talk of TVS, we were looking at two-wheeler stocks last month when the whole GST bill got passed. And I thought at that time Hero Moto was a better stock because TVS was anyways really expensive in terms of, their future plans. They're doing a lot. I agree that the next few months could be very interesting for a lot of these consumption-themed stocks. But again, the question is at what price do you buy these stocks? A TVS or even a Hero Moto or Bajaj. I mean, right now these stocks do look expensive. I would say some of these stocks, Hero Moto, Bajaj, you could buy and hold into your portfolio for a very long time. But is this the best time for someone to buy this if he does not already have it in his portfolio? I don't think so. I'd like to wait out until, either, as I said, the valuations correct or markets come down a little and then look at buying into these sectors. Right now, I would rather stick to, stocks which are available cheap, where the sectors itself are facing temporary problems like I said ITC, L&T, ONGC is the other stock that I've recommended before, and obviously it's run up 10-15%, but right now also it's as cheap as you get at 237. That's a stock you should add to your portfolio in these kind of markets. So chasing these high price earnings multiple type of stocks right now, probably not the best thing to do given the markets itself are really expensive overall.
Sameet, where do OMCs fit on your radar?
Sorry, I couldn't hear you.
OMCs, Sameet.
See, OMCs have already enjoyed its strong bull run in last 10 to 12 months, be it BPCL, IOC, HPCL. All those stocks have hit their new all-time highs. If we look at the IOC, BPCL price structure, they have been consolidating since last couple of weeks time. After such a sharp rally, it is quite evident for those stocks to undergo some consolidation phase or a minor profit booking. What we see is IOC is likely to now consolidate within a range of 575, 585, which is the higher end, and lower side 540, 530 we are seeing as a strong support. So we don't see any major movement in IOCs. This stock is likely to continue its consolidation phase at least for next month or and a half. This stock is likely to move within this 30-40 point kind of band.
All right, let's just run through some of those closing quotes coming in today. Yet another, well, not so quiet day on the index. We did manage to close up 0.5%, but 86.18. Z was one of the top movers, up 5%. Tata Motors, brokerages being bullish post earnings. Hero, Reliance, some of the other big names there on the move. In fact, two-wheelers as a whole did see a bit of an uptick. L&T was also looking strong today. ICICI Bank, Adani Port also seeing that spurt towards the end of the session. We did see auto and two-wheelers in particular as a theme. So even a TVS, Bajaj, for instance, the entire pack was on the move. Other than that, banking was kind of, we had a few stocks that were up about 1% or so. So Bajaj, Yes Bank, SBI, for example. IT did see some amount of recovery coming in today after last week's selling. We saw some of the other oil and gas majors quiet. ITC was quiet today as well. ONGC was also down about 0.4%, and TCS was also down about 0.4%. HDFC Bank, 1.5% lower. Lupin, Tech Mahindra, Wipro, a couple of the other names on the downside. In fact, HCL Tech was down 3%. But the names that recovered from the IT pack included an Infi, which was up about 0.8%, for example. So a little mix, but some recovery on select stocks coming in. But that's also where the pressure came in today on some of those names. Telecom also continued to see pressure given the kind of competitive intensity and how it's heating up at this point of time in that space. In the mid caps, we saw names like a Titagar up 7%, for example. Edelweiss, JK Tyre has been constantly on the move. RCap had a good day. M&M Finance, Sri Renuka has also been active today, up about 5% from the start of the session. See it, and we have seen auto ancillary, tire counters, etc. on the move. So a couple of those names there that stood out for the session today. V-Guard, Hathway Cables, a couple of the other movers there. Texmaco, Berger Paint. So just a mixed bag, but just to run you through how things were in the broader markets. Interestingly enough though, while the mid-cap index was pretty much in line with the heavyweights, we saw the small-cap index quiet today, overall up about 0.5% on both those benchmarks as well. Rajat, any closing comments you'd like to leave us with today?
No, just as I said, our markets are expensive right now, and you've got to tread them really carefully. It may appear really attractive to go in with your cash, because by now you would have made a lot of profit if you've been investing from the beginning of this year. But be careful, markets are due for some correction at some point, and some of the sectors are looking really overvalued right now.
All right, gentlemen, thanks so much for joining us on the show today. Let's leave it there. When we come back on Rising Stars today, Shopmatic, a company that helps vendors sell products online. We'll talk to the founder when we come back.